Hi everyone, Mathis Connor here with Connor Management Group, and today is Thursday, April 10th, 2014, and this week we're going to look at the best telecom company to buy right now. On the opening slide, we see that the industry of this company is in the telecom services domestic category, and we see the 12-month upside potential at 22.8%. On to the next slide. I think this is a name that most of us have heard of. The name of the company is called Verizon Communications, and the ticker symbol is VZ. And once again, we see this company's upside potential over the next 12 months at 22.8%. And on to the quick facts slide. Here we have Verizon Communications, through its subsidiaries, provides communications, information, and entertainment products and services to consumers, businesses, and governmental agencies worldwide. Its wireless segment offers access to various wireless voice and data services comprising internet access through smartphones and basic phones and notebooks and tablets. A little bit more of a rich description I also have here is that Verizon was created by the merger of Bell Atlantic and GTE back in June of 2000, and they serve approximately 98.2 million people. Back in January of 2006, they acquired MCI. They acquired another company called Alltel back in January of 2009. Let's see, another thing that not many people may be aware of is that they have a wireline presence in 26 states and Washington, D.C., and their wireless presence is in all 50 states and D.C., as well as 19 countries. In 2013, their wireline business actually provided 33% of their revenues, and the remainder came from their domestic wireless business. So Verizon is quite a sizable company. Their website is www.verizon.com. The company is headquartered in New York City, New York. They were founded in 1983. The number of employees Verizon has stands at 176,800. Once again, the ticker symbol is VZ. They're also known to be in the technology subsector. The specific industry is classified as telecom services domestic. The annual revenues for Verizon over the last 12 months stood at $120.6 billion. The net income over the last 12 months is $11.5 billion, and the cash from operations was $38.8 billion over the last 12 months. That's quite a bit of cash there, that's for sure. The market capitalization for the company as of yesterday stood at $198.7 billion. So Verizon is definitely a large, very large telecom company. Onto the products and services slide, we have a picture of the pretty well-known Verizon logo, and we also have some pictures that kind of describe the different three segments. And one slide is a picture describing their segments: the wireless business, which was just described, wireless service devices and accessories. The next is their residential business, internet, TV, and home phone services. And after that, their business services tailored to your business needs. So there's an additional picture for the wireless service of their latest Galaxy S5 promotion. Additionally, For the residential business is additional photo of what they call their Fios triple play. And if many of you haven't heard of Fios, it's their fiber optic to home internet service. And another picture is just kind of describing at a very high level their solutions for businesses of any size. It says basically packages that they have for small businesses, medium businesses, as well as enterprise scale businesses. So that's what we have on their products and services slide. On to their metrics. Once again, the annual revenue for Verizon over the last 12 months was $120.6 billion. The net income was $11.5 billion, and the cash from operations was $38.8 billion. The profit margins we have for 2012 at 5.2%, and for 2013 at 6.6%. Those margins sound thin. The operating margins are definitely a bit higher, more in the 20s. On to the valuation metrics. The trailing PE ratio for Verizon right now is at 16.8. The forward PE ratio is at 12.5. That implies most analysts think that earnings is going to grow at a nice clip. The PEG ratio is at 2.4, not necessarily low. The price to sales ratio is at 1.7. The price to book is at 3.6. The enterprise value to EBITDA ratio is at 4.9, and that actually sounds a bit low. So the valuation metrics imply that there's some room to advance, and they don't seem to be too far out of line, although the enterprise value to EBITDA does seem a bit low to me. Going on to the recent price action, the recent closing price, yesterday's closing price for Verizon was $47.98. The 52-week low for the stock was $45.08, and the 52-week high was $54.31. So the stock is closer to its low than its high, but as we'll talk about in the next slide, it's for the most part the stock's just been going back and forth between those two ranges over the past year. The 20-day moving average right now is at $47.28. The 50-day moving average is $47.14, and the 200-day moving average is at $48.47. That's a very tight range from the 20-day to the 200-day moving average, and that just confirms that the stock has not moved a lot or hasn't moved too far out of its range for most of the year. The average daily trading volume is quite heavy for Verizon. It stands at 42,800,000 shares per day. The beta was not available. It was an extremely low number that quite frankly just didn't seem right. The dividend yield stands at 4.4%. So this is a company that pays about twice what the average dividend you'll get in a lot of large corporates. And the average dividend payout ratio for the last 3 years has been 85%. So Verizon pays out a nice portion of its earnings and dividends every year, that's for sure. And onto the price chart, Verizon hit its high of around $54 back in April of last year, late April, and the stock price, pulled back to around, the $48.50 from the April level, $48.58 level from April through July. Then it pulled down to $44 in September, and from September it raced back up to around $50 in November, and then from November it steadily declined, somewhat steadily declined in late March to around $45.50, and is now at $47, $48 or so. So over the past year, the stock has really kind of just moved in a not a very tight range, but definitely not a wide range. And yeah, I don't think there's too much here story-wise to explain these oscillations. That's for sure. On to the last summary slide about Verizon. Their financial statement quality is excellent. Let's see here. Yeah. I mean, they have a lot of cash, and their liabilities really are not anything to worry about. The profit margin trend has been flat. The price pattern trend, as we mentioned, has been flat. The overall market, it's definitely kind of showing some bearish signals. The last few days, the market has experienced some pullbacks, especially today. The interesting thing is that these pullbacks have been primarily on the NASDAQ market, which is typically smaller stocks, and that's consistent with what we've been seeing over the past few weeks, where we've told you that we've continued to see a number of overvalued names push up. Those tended to be smaller companies, and now it seems like they're starting to pull back a bit. So so Verizon, yeah, they may face some headwinds, but it seems like the headwinds right now are for the smaller companies out there. Once again, the recent closing price for Verizon was $47.98 yesterday, and we see the 12-month price target at $58.92. So this is a company with a 12-month upside potential of 22.8%. So a company with a appreciation potential of 22.8% plus a 4% dividend historically. This plus excellent financial statement quality, we think that this is the best telecom company to buy right now. So take a look at it. We think it's a fairly safe bet, but consider adding it to your portfolio. We don't think you can go wrong. And on to our last slide. It's just a reminder to sign up for our weekly newsletter, and you can get it by going to www.gmcstockpicks.com, and there you can be among the first to hear about great opportunities like this one. We found Verizon by running our proprietary algorithms, where we rank well over 3,500 stocks every week, and we analyze, review, and rank them based on appreciation potential. So we identify those that have the greatest potential to go up in price, as well as those that have the greatest potential to decline in price. So we feel pretty good about the stocks we've uncovered, and please check out our website to see more. And that's all we have for this week, and we hope this presentation has been helpful, and we'll talk to you soon. Take care. Bye.